Good evening. This is your Northeast Asia market close briefing from AJP. Another bruising session hit Seoul Monday as semiconductor selling and leveraged unwinding dragged the KOSPI sharply lower, while China stayed remarkably steady and Japanese markets were closed for a public holiday. One theme dominated the region today: semiconductors. Investors continued cutting exposure to Korean chip stocks after last week's violent swings, while concerns over the memory cycle and leveraged ETF liquidation kept pressure on Seoul. But the damage was sorted by exposure. Korea, where memory shares dominate the benchmark, fell more than 4%. China finished almost unchanged as gains in consumer and energy stocks offset weakness in technology shares. Japanese markets were closed Monday for the Marine Day public holiday, leaving investors to wait another day before reacting to the latest moves in global chip stocks. Attention now turns to a busy earnings week, with results from Alphabet, Intel, Hyundai Motor, and Doosan Enerbility expected to shape sentiment. The KOSPI closed at 6,516.27, down 304.33 points, or 4.46%, extending last week's sharp correction, while the KOSDAQ fell more than 5%. The pressure remained concentrated in semiconductors. SK Hynix fell 4.23% to around 1,764,000 won, while Samsung Electronics lost 4.31% to 244,000 won. SK Square, another AI-related heavyweight, dropped 2.89%. Analysts say today's weakness reflects more than negative headlines. After the market's explosive first-half rally, profit-taking has collided with growing concerns over the semiconductor outlook and continued deleveraging from single-stock leveraged ETFs, creating a market that has become increasingly sensitive to bad news. The silver lining is valuation. The KOSPI's forward price-to-earnings ratio has fallen to around 5.8 times its lowest level in roughly 2 decades, suggesting recent losses may have outpaced any deterioration in corporate fundamentals. Investors now shift their focus to this week's earnings reports for signs the sector can regain its footing. Shanghai's Composite closed at 3,763.67, slipping just 0.01% in one of the region's steadiest sessions. But the story beneath the surface was sector rotation rather than broad risk aversion. Kweichow Moutai jumped more than 5% as investors rotated into defensive consumer names, while PetroChina also gained more than 5%, extending recent strength in energy shares. On the other side of the market, China's satellite communications fell nearly 4%, showing that technology stocks remain under pressure even as the broader index stabilizes. Unlike Seoul, however, China's heavyweight consumer and energy sectors were large enough to offset weakness in growth shares, leaving the benchmark virtually unchanged. Japanese markets were closed Monday for the Marine Day public holiday, with no trading on the Nikkei 225 or TOPIX. Today confirmed what this market has become: not a region moving in lockstep, but one increasingly divided by sector exposure. Korea remains tied to the fortunes of memory chips. China has found support from consumer and energy leaders, and Japan returns tomorrow after sitting out the latest wave of volatility. The next answer will come not from sentiment, but from earnings. We'll be back tomorrow at the close with the answer to whether earnings can steady Northeast Asia's markets. If this briefing keeps you ahead of the region's markets, subscribe and turn on notifications. Thank you for watching AJP.